Today, thousands of Canadians have been waiting for. The Bank of Canada cut its key interest rate for the first time in more than 4 years today, marking a major turning point in its fight against inflation. Governor Tiff Macklem says the central bank has more confidence inflation is moving closer to its 2% target, citing a number of indicators that suggest price pressures have retreated.
Well, the first message is that Canada's financial system remains resilient. Over the past year, the risk of recession has diminished in Canada and globally. Inflation in most countries has come down, and inflation targets are in sight. The reason why it's so important to get inflation down is so that households don't need to worry about big increases in their cost of living going forward.
Let's bring in Manisa Danabal. You've been getting a lot of reaction to the news today, Manisa.
Hey, Nicole. Yep, a lot of people are chiming in online. Ontario Premier Doug Ford also welcomed the news today. It won't just impact those with mortgages and loans, but also every single Canadian impacted by the higher food prices.
Oh my God! Okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm!
After years of higher bills and overpriced groceries, finally some good news that many from coast to coast have been waiting to hear. With a 1/4 percentage point cut, Canada's central bank's key interest rate now stands at 4.75%.
In some ways, this is a bigger deal for, I think, sentiment and psychology than it is in terms of direct economic impact. I mean, every basis point, every 1/4 point, it does matter to someone. But the reality is, I think the much more important issue here is that we have seen the first cut by the Bank of Canada. They've opened the door to more cuts.
Over the next year and next 2 years, we should see interest rate going back to its neutral level.
Experts say interest rates are probably not ever going back to how they were before the pandemic, but eventually the short-term rates could go down by 2 percentage points over time. Some also don't expect a significant difference in the housing market, but for now, those who have a mortgage renewal coming up in the next year or two or a variable rate mortgage will see a little bit of relief. This is something Canadians need after struggling with the cost of living the past couple years.
Living in Canada is crazy, stupid, expensive.
It's just so frustrating that you do all the right things, you go to university and then you come out, you get a job, whatever, and you can barely afford rent.
Don't even get me started on groceries. If you don't have a 6-figure job in Canada, I honestly do not know how you survive.
Canada's annual inflation rate has steadily declined in recent months, reaching 2.7% in April. Today's announcement puts the Bank of Canada ahead of other central banks in the Western world in cutting interest rates, including the U.S. Federal Reserve. Some experts were surprised by the fact that when asked how much the Bank of Canada can diverge from its peers, Tiff Macklem said it doesn't need to walk in lockstep with the U.S.
I think the U.S. eventually will be on an easing cycle as well. They are slightly behind everyone else because the economy has been doing much better than most of the economies. But we are seeing signs in the U.S. that the labor market is now cooling off. There is more easing on terms of inflation, with less pressure on prices to increase.
But Canadians definitely aren't out of the woods yet, because just like another cut isn't guaranteed, we never know if a hike could be on the table in the near future.
The Bank of Canada was relatively clear in terms of what to watch out for, what to be concerned about. They mentioned global factors, and I think what they're really keeping an eye on there is energy prices, oil prices in particular, but also possibly food prices. They also pointed to home prices. They would be concerned if home prices suddenly, took off again. And finally, they're watching wages.
Experts say any other changes to the interest rate in the next few months is unlikely, since it may be too soon to cut things further. The next scheduled date for announcing the overnight rate target is July 24th.